Ladies and gentlemen, welcome back to the channel. Thank you so much for being here as always. Today we've got another crypto and Bitcoin market analysis type of session going on with Brian from Santiment. We're going to be looking at what the data says about where the markets are going, where we've been, try and make sense of it all. And so Brian, thanks for being here as always, man.
Yeah, great to be here as well, and I'm so happy that we can touch base on how the markets are looking. We had a recent pump, if you want to call it that, at least a mediocre pump over the last day or
Yeah.
so, and we're now seeing a bit of a correction. So I'm excited to jump into a few metrics with you and see what the data is indicating.
Yeah. So wherever you want to start, maybe we start on the Bitcoin side. I think that's where a lot of people are most interested these days.
Absolutely, yeah. I'll pull up a quick Bitcoin chart, and then we'll look at a few uh, coins that have really been relevant to this pump, such as ApeCoin, EOS, Pancake, Zilliqa. They've all had pretty good 24 hours,
Hmm.
uh, but a lot of them, as we can see, have already retraced here. So we'll take a look at Bitcoin to start, and then I've got a little bit of a segment on Bitcoin that we can check out here. So or on ApeCoin, that is.
Sure.
So we'll start with Bitcoin and look at how a few of the metrics have been shaping up for it. We can see circulation and daily active addresses. They've mostly been pretty flat. We can look at these 30-day trend lines for circulation, which is the amount of unique tokens moving on the network. It's rising a bit, and it's actually in a pretty good spot compared to the low market cap levels. As we can see on the NVT chart here,
Hmm.
um, we're actually on a seventh straight month with a semi-bullish divergence, which is what this yellow-green bar indicates. And it really means that because of the big price decline that we've seen since November, the fact that circulation has stayed relatively stable is actually a good thing. It means
Hmm.
that the price is kind of under where it obviously was back in November, but circulation has stayed where it was in November. Therefore, that's created a natural bullish divergence, not an extreme one like we saw way back in 2017,
Hmm.
which was telling us that prices were due to explode essentially,
Hmm.
which they did. But overall, it's looking pretty good here. So I'm happy to see that utility is still looking good in terms of the amount of unique tokens moving. And then in terms of the amount of unique addresses that are actually interacting on the network, um, it, it probably could look a little better. As we can see in this
Hmm.
faint brown line here, the 30-day trend line is moving down a bit.
Yeah.
We typically like to see, just as an arbitrary number, around a million or more daily active addresses going on. And right now it's looking like the average is around 922,000 a day. So it could look a little better, but it isn't falling off of a cliff either. So there's still plenty of active addresses out there that are
Hmm.
interacting with this relatively flat market that we've been in for the last week or two after kind of a downswing
Yeah, and I'm sure like
into the early. Mhm.
people right now would of course want to go back to all-time highs. I mean, everyone would say that. But I think what a lot of people will probably be happy with right now is a little bit of stability, right? Especially with all
Right.
the uncertainty that's going on around the world right now from a macroeconomic perspective and policy and regulation. Having stability and a stable, more stable asset or a store of value is almost more appealing right now for a lot of people than having a big swing up to all-time highs, trying to time the top and then ride it all the way back down. Most people are going to end up losing on that type of move. I mean, what do you think about that? Do the charts
Yeah.
these days and the data scream to you, hey, we're going to see a little bit more stability, or what do you think?
Yeah, I think things have already calmed down a bit.
Hmm.
Obviously, April hasn't been so great
Yeah.
because it was kind of a reaction to a very good March where we saw Bitcoin jump all the way back above 48K. And now, we saw a low of just below 39K this month. So obviously prices have retraced, but we can see here, I mean, full screen it, we can see that, as of April 12th or 11th or so, we were starting to level out a bit.
Hmm.
Um, And it's tough to see a level out after a big decline because obviously everyone is trying to buy the dip and get things to move back up, which it hasn't really yet. We saw a very minor
Mhm.
surge, but relatively speaking, it's at least flattened out a bit since, the immediate fall after the all-time high all the way
Mhm.
up until, you know, probably late February when we got the Ukraine-Russia war announcement that really caused some chaos for a while. Um, but that said, there's still a lot of uncertainty out there, major polarization. I mean, we have to remember what roughly, if I highlight this, hold down shift, we can see that we're still about 40% below the all-time high that
Mhm.
was made in mid-November. So that's naturally going to cause a little bit of uh, chaos, a lot of FUD, and it's tough to see full-on stability in the markets until the
Mhm.
bulls and the bears are both kind of satisfied with where we are. And I think the bulls are a little more dissatisfied overall than the bears right now.
Yeah, I would agree. I would agree. And I mean, if you look at this, what scale is this on? Is this on 6 months or longer?
Yeah, we're
This view.
looking at the last 6 months here.
Yeah, I mean, if you look at MVRV, and we've talked about this on the channel in the past, it's not perfect, but it's a pretty darn good indicator as you cross those threshold lines at the what I think that was like at the 10 or 11% mark, but I think we've talked about 15% being the threshold. You can kind
Exactly.
of start to see the pattern, right, of how you want to play things. You're obviously not going to, win out huge by following this, but you can use it to aid in your decision making as things break either on the high end or low end.
Right. Average trader returns are essentially confidence indicators. The
Mm-hmm.
the closer it gets to this plus 15%, the higher the chances are that prices are going to correct.
Mm-hmm.
Vice versa on the low end, the closer it gets to negative 15%, that's when you'll typically see bounces. You saw one here, at least temporarily, back in December. We saw a very clear bottom here in mid to late January.
Mm-hmm.
And now we're on the negative end, which means on average, this is a less risky time to open up a position or add on to your position in Bitcoin. It isn't an extreme case like
Yeah.
it was, 2 days ago, where we actually got down to an MVRV below negative 10%. But right now, being at about negative 5.9%, certainly not bad, and it certainly looks more bullish than bearish, considering that average MVRV would be zero.
Yeah, you can test this too, which I've been doing just by way of our conversations, trying to sort of validate some of the data and things like that. If you have do a dollar cost average, say weekly or monthly or what have you, try and use this, right? If you're already dollar cost averaging, you're already not really thinking about timing the market, right? It's the point of dollar cost averaging, but you can use it to test these things. So for me, I'll look and check the MVRV chart and say, let me put my dollar cost average by this week on one of these negative periods and see what the
Totally.
performance is looking back. And you can sort of validate. Of course, there are exceptions, but this is a pretty good indicator probabilistically of what may happen next in the short term.
Yeah, we definitely gauge MVRV as a top five leading indicator on the
Mm-hmm.
platform, and you can clearly eyeball it with or without Hashoshi's uh, back test and see, when things do get high, you've got corrections going on um, most of the time, right? So
Mm-hmm.
if you follow a dollar cost average uh, or whatever strategy you want to implement where you're taking profit up here and buying down here, you'll generally do pretty well just
Mm-hmm.
as a baseline. But if you combine it with like whale behavior, um, some of the new metric, some of the new metrics, I'll at least show one on the call today, and maybe show more in the future. But combining this with some of our other top leading indicators, you can do pretty well in the markets, given enough patience and discipline.
That's the key. Patience and discipline. I mean, can you show us one
If
of the
only we
other?
were all perfect, right?
Yeah, if only. Well, if everybody wins, then you know wouldn't really work. The market wouldn't work.
Exactly. Not possible, if
Right.
only. But
Right.
back in 2017, everyone thought they'd get Lambos together, and unfortunately, it's just not how it works.
Right. Exactly.
But yeah, take a look at this new metric here. So let me
Cool.
full screen it really quick. We're looking at two different metrics. I'll simplify it and just look at Bitcoin for now.
Cool.
or different assets. I was showing Bitcoin and Ethereum, but we're just going to look at Bitcoin compared to Bitcoin's price here. And what I'm showing is the ratio of the on-chain transaction volume that is in profit to loss. So
Hmm.
basically, the higher we get here, the more likely, uh, not more likely, the more definitively there is profit going on in every transaction that's happening. And I'm going to mark the 0% line right here just to show where the cutoff is. So
Okay.
anything over this
It's
line
profit.
means that exactly, there is a higher ratio of transactions taken in profit versus loss. Anything below means that there is actually more transactions where people are capitulating and selling their bags at a lower price than where they received them. So intuitively, you would expect that when profit taking is going on, that's generally when price corrections happen. You can see the two biggest bars on this chart over the past month, right here on March 28th and right here on April 10th. There was immediate tops that formed and prices declined afterwards. Vice versa, and a little less reliably, um, the negative bars, the two
Hmm.
most negative, in fact, are pretty good examples. April 6th, right here, at the end of that bar, prices rose. April 11th, very clear price bottom, and prices rose for the next couple of days. So this is
Hmm.
kind of an intraday swing trader metric, but very useful and one that gives a lot of promise to uh, figuring out when a profit take and dip buy would be justified. And I really like it a lot. I think it's going to be tremendously useful as we research it more and more.
Awesome. Yeah, I mean, to me, right here, very clearly, you can see that this is a pretty solid one for profit taking, right? Indicating to you here again, probabilistically, now might be the time to, with others, take some profit off the table in preparation for a sell off. Is that the thesis here?
Yeah, exactly. It's for those familiar with network profit to loss, realized or unrealized. It works similarly, where we just sort of alluded to the fact that the sector is a zero-sum game. If there's a ton of profit being taken, there has to be an event that occurs to allow some losses to accumulate too and even things out. Same thing on the bottom end. If there's a tremendous amount of capitulation and loss taking happening, then there's going to be an event that occurs to allow people to profit again. And that's how the cycles of crypto have worked for a dozen years now.
Makes sense. Makes sense.
Yeah, and we also have this new model that we just released yesterday. We put out an article about it explaining how it all works. You
Hmm.
guys can check it out at insights.santiment.net. But it essentially shows which assets are in that profit taking area and which are trading at a loss over the last day. So it's a 24-hour cycle here, and it simply shows, the ones that are showing uh, profit here in red and ones taking a loss here in green. It'll also show the average overall, so you can see that if I highlight this black line, so 121%, that would mean that on average, the overall crypto markets
Hmm.
are seeing about 2.2 times the amount of profit taking transactions as they're seeing transactions at a loss right now. And then
Yeah.
the 7-day one shows it's almost three times as many profits happening compared to loss. So that tells me there's a lot of people who have benefited from just the last day or two of this rise, who are now profit taking, and it's going to be a bit of a short-term signal that a correction could take place.
Very interesting. I mean, you just stack up a lot of these, where of course you're not going to ever make a 100%, guaranteed probabilistic decision, but you will have a better chance of making the right choice following trends like this. Is starting to stack them up and say, this is cumulatively what all this data is telling me, for Bitcoin or for altcoins. I mean, in the altcoin space, before the jump, before we started recording today, we were talking a little bit about like some of the most hyped altcoins. I mean, ApeCoin being one. A lot of people have been commenting on my channel about it lately, and yeah, can we look at that?
Yeah, totally. As promised, let's dive into a few metrics here really quick. Ape has been up. 24% in just the last day. If we go
Mhm.
back to what at the bottom 18th or so, so it was up a total of 54% at its peak. It's
Mhm.
now come down just a tad, but it's still obviously quite high. uh, Daily active addresses, we saw 17,000 daily active addresses back on March 28th. I know it's a pretty short-lived coin, so this could have been some initial crowd discovery going on. I'm really not sure.
Right.
Regardless, you can see just how low the daily active addresses have been since. So that would be
Mhm.
one initial red flag for sure.
Yeah, it's very
Um,
interesting.
yeah, another thing, let me zoom out just a little more. I want to know just how long this. Okay, so it's existed publicly since about March 17th. We're talking about a
Yeah.
5 week or so old coin. Um, if we look at the amount of supply on exchanges, this is a bit deceiving because it's such a new coin that this is kind of natural.
Mhm.
When coins are first being distributed, they're naturally going to start moving to exchanges so that they can cycle from address to address. Uh, that said, we were at about 3.7% on exchanges a month ago versus 4.3% now. So we are seeing a pretty consistent uptick, and that's probably going to continue
Mhm.
until things start to normalize for a coin, which usually starts to happen in the 3 to 6 month mark from what I've seen.
Are these centralized exchanges or dexes or both that you qualify here in this
It's
supply on
both.
exchange?
Yeah, it's both. There are some metrics like exchange flow balance where you can actually click on exchanges and look through things. I think for something this new, though, it's probably just going to show them all combined
Yeah.
until there's some serious exchange data that we have. But if you were to look at like Bitcoin, Ethereum, a lot of the top 100, 200 assets, and you click on exchange here, you'd see like dozens, if not, I think even hundreds of different exchanges where you can filter through and see specific inflows and outflows for whatever exchange you want to analyze. Uh, that said, for Ape, this is combining everything right now. And we can
Mhm.
clearly see that right when we had our largest inflow, which is going on basically in the past 24 hours, that's when we saw this big polarizing correction occur. Um,
Mhm.
so this tells me there could be a little bit of further downside. This isn't hour by hour though. This is more like a daily or even weekly indicator.
Mhm.
So if prices rocket back up in the next couple hours after we record this, don't be surprised. But overall, historically speaking, you see a huge inflow spike. That's happening for one reason, and that's for people moving their cold wallet storage onto exchanges for the purpose of potentially selling. Doesn't mean they're
Mhm.
always going to, but they're at least potentially going to.
Yeah. I mean, again, you're looking at probabilities. If coins are on exchanges, your barrier to selling them a little smaller, right? What do you do when you
Precisely.
send to a centralized exchange, especially? You sell.
Right, right. And then we also alluded to network realized profit loss earlier on this call. ApeCoin is seeing a ton of positive spikes right now, and this is all basically uh, realized profit going on the network.
Mhm.
And this, especially huge bunches of them like this, that's a clear sign that we're getting a bit overheated.
Mhm.
It may last a little bit longer. Who knows? But historically speaking, this is going to be a correction sign as well. And it's already, of course, started to happen. So if you started to see this bunch of spikes here, and then price still went up a little bit more, that would be a nice signal to you that you can get out at a pretty high point, and there was going to be an imminent correction. So expect some polarization to continue, especially after an all-time high happens for a brand new coin. Um, but this would be another sign that all things equal, prices have to come down so that we start to see a few negative spikes in network realized profit loss.
Mhm.
So I think this is a nice signal for the early goings of ApeCoin.
Got it. Got it. Yeah, I mean, looking at especially altcoins that are brand new and ones that have a lot of hype behind them, You definitely start to see the patterns and the trends, and sometimes where they're broken, where they break the patterns.
Yeah, exactly. And we can see social dominance wise too. Like we had a huge breakout. This was kind of the signal of crowd discovery here on April
Mm-hmm.
11th. And it worked as a nice bottom signal actually. So in the case where a social dominance spike happens on a downswing, which it essentially was, if you kind of look at the 2 week pattern here that was happening prior to it, um, we suddenly saw what, like social dominance during this 1 hour got up to 18.8% of all discussions in crypto when filtering for the top 100 assets. So it
Pretty
was
big.
probably being discussed even more than Bitcoin at this time, which is pretty nuts. Uh, and because it happened on a downswing, this was a sign that the crowd was interested in buying, and they essentially pumped up the price and did a fairly good job of it. At least for this part, I would say the social dominance spike was directly correlated to how the next 2 to 3 days went. Uh, this one, it could be more of an anomaly and related to something else. I'm not sure. But now we see at least a mid-sized social dominance spike that happened as the rise was happening.
Mm.
And that was a sign that the crowd was starting to get a little FOMO-y. They were starting to get euphoric and, you know, talk on their Discord, Telegram, Twitter, and Reddit handles about how, you know, everyone needs to get into ApeCoin because it's going to the moon, you know,
All that good
whatever,
stuff.
all the stuff that
Yeah.
comes with pumping S coin. And I'm not going to claim that I don't know enough about it
Yeah.
to talk about, especially because it's 5 weeks old. But usually when you see these inorganic pumps, it comes with a lot of volatility where social dominance will push the price up and down freely and easily.
Yeah, very very heavily. And listen, I think that that's to be expected for something this young. The distribution of tokens is probably not very wide at this point in time. So I mean, looking at these things for altcoins, both new and established, very valuable using these types of metrics for Bitcoin as well. I think repetition of watching these videos and seeing these trends play out over multiple months, multiple weeks, I think people will start to notice if you're watching the show, repeatedly, that this can really change how you go about trading the markets. I mean, it has for me even, and I've been in this space a long time. So, of course, Brian, as always, appreciate you coming and sharing the insight. And this show is not sponsored by Santiment, but you can use the code Hashoshi to get a discount on a plan at Santiment if you want to start using this data in your own crypto activities. So, yeah, thank you so much, Brian, for joining.
Thanks, brother. Yeah, always a pleasure. Thanks for having me.
Absolutely. Thanks so much to everyone who's watching. Make sure you stick around to watch another video here on the channel. I'll link it up on the screen. Hope you have a great rest of your week. And until next time, cheers.